Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Let's take a look again at the gold market. So yesterday we talked about the really tough situation in the political sphere in the world, and we said that market behaves too slow for action that should follow when the market hits the major weekly target, when it forms the bearish pattern. Still, yesterday market was able to move slightly lower and continue the action that in fact should follow as a reaction on the technical factors that we have. But this action was not really very significant. The market just has hit our 1317 target. As you know, right now is new conflict is growing on in India and in the Pakistani border. So this is just another driving factor for the gold market, and situation becomes more sophisticated. Now we have in Latin America, in India. So the same story stands in the Middle East. So it's really becomes very tricky moment, and at any time some new event could happen that could shake the gold market. That's why, as you can see, reaction on the technical factors on the market stands slow and a bit softer and just smoother than compared to normal technical reaction when everything is okay in the world. So, but still, we have some drop down here. Grabber has been erased. So, if you remember, yesterday we also talked about this grabber that, well, if market will hold above the 1325, it's going to be deeper retracement up. But currently market drop and close below these lows, and now we could delete this grabber pattern. Potentially, based on the technical picture, it's very logical pattern that we could get is the hand shoulders, of course. This will be normal, very classical reaction on the long-term target, on the weekly target, any kind of the larger ABCD retracement. But in the current environment that we have in the politics, it's really our forecast could be in vain just to make some longer-term forecast for the gold market. It will be good if we will if we will currently estimate what could wait us in the today's session tomorrow. Tomorrow also will be the ADP, non-farm products release. So that's why let's focus on the just couple of sessions that we could get. So tomorrow, guys, we expect that downward action will take the pause just because market has completed important targets. So take a look what we have on the hourly chart. On the hourly chart, yesterday our discussion was at that moment where the hand shoulders pattern started to form, and I said keep an eye on this area 1325. This will be also the bottom of the right arm. If market will hold about this area, then it's possible deeper ABCD pattern right to the 1325. If market will drop below and hand shoulders will be failed, be ready for a downward drop. And if market was not able to reach the neckline and drop below these lows, you can see next target has been hit. So this is the butterfly COP of this large ABC top right at the 1317. So this target has been completed. Now there should be some healthy reaction. So either this level, this will be normal retracement 1323, or even confluence 1326, 1328. So that's two levels where market theoretically should finish the upward pullback. Because in the case if market will break the confluence, this will be warning sign, and it could mean that market could show significantly higher upward action, or some other changes could appear on the daily. It may mean that theoretically market even could challenge the previous top, because normally when the downward action stands and we expect the hand shoulders pattern here, or at least some normal reaction on the long-term target, market should follow to the downside and show this reaction. If somehow market stopped and on the retracement breaks the important and strong levels, this is not typical for the bearish market. That's why currently we're watching for a normal natural retracement with these two levels this one or this confluence. That will be invalidation point, guys, the C point in the top. If market will raise the butterfly and try and move higher, well, theoretically this could lead to appearing of the hand rollers pattern here and create a ABCD projection, or it could be even the challenge of the stop. So breaking of the C points will be negative sign for the bearish stop, and it could mean that something is changing. But probably we will know that because I suppose that it will be accompanied by some important news, breaking news on the market or in the politics sphere. So it will happen just occasionally. But currently, today we're watching for retracement. Maybe some bearish continuation patterns will be formed, the kind of the ABCD, exactly triple to sell we could get. So now we are watching for these two levels. So taking into consideration that here it was really fast action, right at 30%, I think that market indeed could reach this area as well. So that's the primary level to watch for. And we will keep an eye on whether retracement will be over at this point, because this is most natural level where market should finish retracement and reestablish downward action, if of course our setup on the daily chart with these hand shoulders is valid. So we will see what really will happen here.